Now that we've finished our direct materials budget, we can move on to the next budget in the chain, which is the direct labor budget. And in the direct labor budget, we are going to calculate the required labor hours that are needed to meet production. We're also going to figure out the cost of those labor hours. So we're going to need two things. We're going to need the amount of direct labor needed to complete each unit, and we're going to need the hourly wage that our direct laborers earned. For our direct labor budget, we have two pieces of information. The first being that Saratoga Chips expects it will take laborers 3 minutes to make a bag of chips, and secondly, that these laborers are going to earn $10 per hour making chips for us. We're going to start with our budgeted bags to be produced row. And in the first quarter, we have 102,000 budgeted bags to be produced. Where did that number come from? It came from the production budget. When we bring up our production budget, we see, just like on our direct materials budget, that we take the number from the budgeted bags to be produced row on our production budget. In the first quarter, we had 102,000 bags to be produced. We just simply carry that number over to our direct labor budget. We do the following for every other quarter. During the second quarter, our budgeted bags to be produced were 111,000. In the third quarter, they were 118,000, and in the fourth quarter, they were 100,000. Meaning that in total, we have 431,000 bags to be produced. Next, we're going to figure out our direct labor hours per unit. We know that it takes us 3 minutes to make a bag of chips. Well, if there's 60 minutes in an hour, to convert that 3 minutes to hours, we simply take 3 minutes and divide it by 60, and it comes out as 0.05. It takes us 5/100ths of an hour to make a bag of chips. That number does not change throughout the period, so we can carry it over to every other space in the direct labor hours per unit row. To figure out our direct labor hours needed, we simply multiply the budgeted bags to be produced during that quarter by the direct labor hours that it's going to take to make each bag. So for the first quarter, we take 102,000, we multiply it by 0.05, and we find out that it's going to take us 5,100 hours to make those 102,000 bags of chips. In the second quarter, we take 110,000, we multiply it by 0.05, and we come up with 5,550 hours needed to make those chips. In the third quarter, we're going to produce 118,000 bags. It takes 5/100ths of an hour to produce a bag, which means that we're going to have 5,900 direct labor hours committed to producing those bags. And in the fourth quarter, we take 100,000, we multiply it by 0.05, and we come up with 5,000 direct labor hours needed. In total, Saratoga Chips is going to have 21,550 hours of direct labor needed to produce the 431,000 bags. The direct labor cost per hour given in the information is $10, and since this has not changed throughout the year, we can just copy it over to every single space in our direct labor cost per hour row. To figure out our budgeted direct labor cost for the period, we take the direct labor hours that were needed and we multiply that by the direct labor cost per hour. If it's going to take 5,100 hours to make our bags of chips in the first quarter and we're paying our employees $10 per hour, that means that our budgeted direct labor costs for the first quarter are $51,000. We're going to apply that same concept all the way down the line. In the second quarter, we have 5,550 direct labor hours needed. We multiply that by our cost per hour of $10, and we figure out that it's going to take $55,500 to pay our employees to make those chips. In the third quarter, we're going to spend $59,000 on direct labor, and in the fourth quarter, we're going to spend $50,000 on direct labor. In total, during the entirety of 2019, Saratoga Chips is going to spend $215,500 on direct labor. Now that we're through the direct labor budget, we can move on to the last cost component of production we have, which is manufacturing overhead in our manufacturing overhead budget. In this budget, we're going to calculate all other manufacturing costs besides direct labor and direct materials, which are necessary to make our chips. So these could be things like utilities to run our machines, the depreciation on those machines, our indirect labor, our indirect materials, insurance on our production facility. All of these things count as overhead. We're going to separate it into two separate classes: variable overhead, which is VOH, and fixed overhead, which is FOH. For our manufacturing overhead budget, we have the following information: that Saratoga Chips expects that the variable overhead cost of each bag of chips will be 10 cents. For fixed overhead, Saratoga Chips is going to have two separate items that they report, the first being depreciation, and they expect to have $7,000 worth of depreciation during the first and second quarters. and then in the third and fourth quarter that amount is going to increase to $7,325. And then Saratoga Chips expects that the other fixed overhead costs, which are going to be utilities, insurance, and property taxes, will be $9,000 each quarter. And then lastly, Saratoga Chips will use pounds of direct materials used as its cost driver for determining an allocation rate. So let's start with budgeted bags to be produced. We're going to start with 102,000, which again we took right from our production budget as we did all of these numbers. Went to our production budget, we looked up the bags to be produced. It was 102,000 for the first quarter, 111,000 for the second quarter, 118,000 for the third quarter, 100,000 for the fourth quarter, bringing us to a total of 431,000 bags to be produced during the year. We multiply that by our variable overhead rate, which given in the information is 10 cents. And this is not changed throughout the year, so we can fill in each category. To figure out our budgeted variable overhead, VOH, we take the bags to be produced and we multiply it by the rate of variable overhead per bag. If we're making 102,000 bags and each bag is going to cost us 10 cents in variable overhead costs, that means that our budgeted variable overhead costs for the first quarter are going to be $10,200. We're going to repeat this process all the way down the line. In the second quarter, we had 111,000 bags to be produced. If each bag has 10 cents of variable overhead costs, that means we're going to spend $11,100 in budgeted variable overhead. In the third quarter, that number is going to increase to $11,800 in budgeted variable overhead. And in the fourth quarter, it's going to decrease back down to $10,000, which is again is our 100,000 bags to be produced at a rate of 10 cents per bag. In total, our budgeted variable overhead expenditures for the year of 2019 are going to be $43,100. For budgeted fixed overhead, we have two components, the first being depreciation. These numbers are given in our information that it's going to be $7,000 during the first and second quarter before it increases in the third and fourth quarter to $7,325, which means all in all, Saratoga Chips is going to spend $28,650 in depreciation expenses during the period. For utilities, insurance, and property taxes, our information tells us that the company expects to spend $9,000 during each and every quarter on these overhead charges for a total of $36,000 in expenses related to utilities, insurance, and property taxes for the year. To get to our total budgeted fixed overhead, we just add together the depreciation amount plus the amount for utilities, insurance, and property taxes. So our total budgeted fixed overhead for the first quarter is going to be $16,000. Repeat this concept again. In the second quarter, it once again will be $16,000. In the third quarter, after the depreciation increases to $7,325, that means that our total budgeted fixed overhead is going to come up to $16,325. And it'll stay the same during the fourth quarter. We're just adding depreciation to utilities, insurance, and property taxes. In total, our overall budgeted fixed overhead expenditures for 2019 are going to be $64,650. To find our budgeted manufacturing overhead costs, all we're going to do is we are going to add together the budgeted variable overhead costs plus the budgeted fixed overhead costs. In the first quarter, we had $10,200 in budgeted VOH. We add that to our total budgeted FOH, and we come up with a total of $26,200. We do the same concept in each successive period. We had budgeted variable overhead in the second quarter of $11,100. We add that to our total budgeted fixed overhead of $16,000 to come up with budgeted manufacturing overhead costs of $27,100. In the third quarter, this number will be $28,125, and then in the fourth quarter, we take our $10,000 in budgeted variable overhead, add to it our $16,325 in budgeted fixed overhead, and we come up with $26,325. In total, Saratoga Chips is going to spend $107,750 in manufacturing overhead costs during the period. As you can see on the side, there's a piece of information given that we haven't used yet, which is our cost driver. The Saratoga Chips will use pounds of direct materials used as its cost driver for determining an allocation rate. Well, let's use that information right now. Our budgeted allocation rate can be found using this formula. We're going to take our budgeted manufacturing overhead costs divide it by our direct materials needed for production, because that is our cost driver, and it's going to give us our predetermined overhead allocation rate. Our budgeted manufacturing overhead costs we just took from the last page. Our total budgeted manufacturing overhead costs were $107,750. For our direct materials needed for production, we go to our direct materials budget, and our third row down was direct materials needed for production, and that total was $431,000. Well, when we divide $107,750 by $431,000, we come up with a predetermined overhead allocation rate of 25 cents. What that means is that for each pound of materials that we use in production, for each bag, we're going to add 25 cents in cost to the cost of goods sold for that one particular bag of chips. Saratoga Chips will allocate 25 cents worth of overhead cost to products for each pound of direct materials used. Now we can figure out our manufacturing cost per tablet. We have our three cost components. The first one that we figured out was from our direct materials budget. We were taking 1 pound of material per bag, and that pound of material, potatoes if you will, cost us 30 cents. So in total, our cost of direct materials was that 1 pound of materials times 30 cents. We're spending 30 cents per bag in potatoes direct material costs. Next up, we have our direct labor. So we'll go to the direct labor budget. We need to figure out how much we're spending in labor per bag. Well, we'll start with how many hours it takes to make a bag, which was 0.05 hours, and we'll figure out the cost per hour, which was 10 given on our information. So our direct labor cost per bag is 0.05 hours per bag times our $10 per hour labor cost, means that we're going to spend 50 cents in direct labor costs for each bag of potato chips that we produce. And then finally, we have our manufacturing overhead costs. We're going to allocate at a rate of 25 cents for each pound of materials we use. Well, conveniently, since it takes exactly 1 pound of materials to make a bag, that means that we are going to add 25 cents in overhead costs for each bag of chips that we make. Meaning that our total cost of goods sold per unit is going to be $1.05 per bag.